नमस्ते इन्वेस्टर्स। बजट आजकल एक बहुत बड़ा बजवर्ड बन चुका है। फिर चाहे कोई सीए हो या फिर चाय वाला हो, सबके बहुत ज्यादा रेडिकल व्यूज है रिगार्डिंग द रिसेंटली कंक्लूडेड बजट। बट वी एट स्मार्ट सिंह थॉट दैट कि सिंस हम इक्विटी इन्वेस्टर्स के लिए बहुत इंपॉर्टेंट इवेंट होता है ये बजट, सो व्हाई नॉट कॉल अ मार्केट वेटरन जिनके पास मोर देन 20 years ऑफ एक्सपीरियंस है एंड जो करंटली चीफ इक्विटी एडवाइजर्स है ऑफ इंटेलिजेंस कैपिटल, एंड द इन्वेस्टर इज मिस्टर अभिषेक बासु मलिक, who also contributes richly to Value Picker Forum. In this recently concluded presentation, he explained his views on the budget and उनका research work उन्हें share करा था. So I hope you will like this session. Thank you.
Hello everyone, I am Ankit Kanodia. Welcome to the 17th guest webinar of Mission Smile. Mission Smile is an educational platform of SmartSync Services. SmartSync Services is a SEBI registered investment advisory firm based out of Ahmedabad. And Mission Smile is an educational initiative by SmartSync Services where we try to educate our investor community through various initiatives. Those initiatives are like a monthly webinar our team of SmartSync Services do. And apart from that, we call eminent guests from the industries every month so that we can have a very wide range of discussions on Indian equities from different angles. Today, our guest for the 17th Vision Smile guest webinar is Mr. Abhishek Basumallick. I'm very happy to share a little bit about him before we start the session. Just to begin with, before beginning, Abhishek ji has been on our platform a year back as well, where we had a wonderful podcast with him. We have just shared the link of our recording on the chat box. You can probably go to that discussion after the session. And now starting with introduction of Abhishek ji. So Abhishek Dada has been in the investing field since 2000. So maybe about 2.5 decades of investing experience. I don't think he need much of an introduction because we all people who are present here live, plus people who will probably watch the recording are already aware of what he has done. But just in case you are a new investor and you want to know, he has been investing in the market for more than 2.5 decades. Plus, he has his own stock advice research analyst, SEBI registered research analyst firm called IntelSense, where he has been educating and helping retail and HNI investors through his research. And recently, he has also started his PMS, which is by the name Sri Rama. And he has been under the top performer multiple times in the last 1 year. So congratulations, Abhishek Dada, for such a wonderful performance as well. And today, as we all know, yesterday was budget. There have been very heated debates on that. And I would also request all of you to watch the important posts which Abhishek Dada has put on LinkedIn and on Twitter. Those are very useful. I specifically like the one which was related to capex of various industries, and I'm hoping that he would dwell much more in detail on those aspects in today's session. So idea today is we will very quickly brush up on the major points of budget from Abhishek Dada, and then we'll quickly move on to the major industries which are at a very good prospects, not just in terms of budget, but also in terms of the general government's policy and other market factors. And then after his presentation, we'll have some time for Q&A. So you can keep typing your questions on the chat box. As and when the opportunity arises, we'll take up as many questions as possible. With this, I'll stop here and I'll let Abhishek Dada do the talking. Thank you once again, Abhishek ji, and over to you.
Thanks, Ankit. First of all, I think you will have to give me permission to share my screen.
I think I have already made you co-host, so you should be able to share.
Ab aa raha hai, sorry. So let me share my screen. Share make this full screen. Hopefully अभी screen दिख रहा है पूरा.
Perfect. Perfect.
Okay. So thanks all of you for joining. I know it's a weekday, 6 o'clock, so may not be absolutely the best time for everyone, but this is the time that Ankit, suggested that we have, and I don't have a problem with the times. And anyway, he's recording it, so it will be available for later. So what I'll try to do is to actually take you through a little bit a few slides. But what I think is more important is we'll try and keep some more time for the Q&A, because I think that is what is going to be more beneficial for all of us. And with that, let's get started. I think before I start, the standard disclaimer, any stock that we talk about today, I'll try not talking about specific stocks, because there are too many, regulatory challenges with that. But we will discuss industries, we'll discuss sectors, themes. And basically, if you believe in this presentation or, in whatever we talk and we buy and sell, then basically it's your problem, right? That is the crux of all disclaimers, all disclosures anywhere in the world. So always do your own due diligence before investing, because ultimately it is your money that you are investing, right? It is not somebody else's money. So you need to have, you need to do your own due diligence, understand a little bit about the stock or the business that you're buying into. Okay. So these two charts are what I think Ankit was referring to. And actually what I found, I was just sitting after the budget, going through the budget documents. The chart on the left is actually directly picked up from one of the documents. The one on the right, I was just jotting down in an Excel myself. And what I was happy to see that this sort of has become viral. You'll have to excuse me. I've got a very bad cold. I'm actually sort of now taking cough syrups while I'm speaking. Last couple of days has been bad. The weather in Calcutta has been really, really bad. Rains and it's been wet, sometimes hot. Anyway, so coming back. So what I found is these two charts are coming back to me from some of the few WhatsApp groups that I belong to. It's been very widely disseminated. I found a couple of global investors putting this in their status updates as well. So what is it that we have to take away from a budget? So first of all, let's understand that in today's day and age, the budget essentially is a signaling mechanism, right? It is basically now a non-event, purely from an investment perspective. It's definitely a very big event for the finance ministry and for other the departments within the central and the state governments. But as investors, the budget is actually completely meaningless nowadays if you have a slightly longer term view. You might say that capital gains tax has gone up and this has happened and that has happened. But it actually, if you see that, if you are going to invest for the next 20 years, 30 years, you will not even remember, when capital gains tax was moved from LTCG was moved from 10 to 12 and a half, and so on and so forth. So on the taxing front, now that I'm talking about it, my basic presumption is that we should all be prepared for higher tax rates, right? Going forward, I personally believe that both LTCG and short-term capital gains tax will go up further from here. At some point in time, we will sort of become like the global standards, where short-term capital gain is taxed at marginal rates, basically your tax rate. and long-term capital gains probably will be somewhere between 15 to 20%. So we are on a glide path towards that. Some point in time in the next 5 years, 10 years, we will get there. So, and I always say that, taxation is a cost of doing business. You're not paying taxes on losses, thankfully, till now. You're paying taxes on gains. So it doesn't, obviously it hurts to pay taxes when the taxes go up, but it doesn't materially change much. The other important factor that a budget does is it signals to you the priorities of the government. And that is what these two tables here are actually meant to show to us. So on the table on the left, right, it's basically telling you that defense and railways continue to be top priorities. A new priority, if you see, is renewable energy, right? So this is big, and this chart is actually the capex part of it, not the OPEX or not the part where we are talking about. So this excludes the salaries and pensions, etc. in defense. So this is just the capex out. If you move on to the chart on the right, again, you will see that the focus is on the PM Awas Yojana, both urban and rural, where allocations have significantly gone up. There's a lot of focus on education, skilling. So you will see schools, then a couple of others. I think ITI has got about 1,000 crores. I don't know whether it's mentioned here. It's probably not. But ITI has got, it is here, right? New ITI upgradation scheme, it's 1,000 crores. So housing, especially housing for the poor, you have focus on Swachh Bharat, which was already there. You have focus on naval fleet. For the first time, I saw a specific budget being allocated for improving or doing capex in the Navy. Semiconductors, you see a huge rise in the allocation of money. If you see, the FAME budget has actually been halved, which is the subsidy element. And instead of that, nearly all of the money has been put into the PLI for automobiles and auto components. And the other very important part here is the solar. So between solar power and Muft Bijli Yojana, Surya Ghar Muft Bijli, you see nearly a 3.5-4 times jump from 4,750 roughly to over 16,000 crores. This is the railway safety budget. So overall, you see, you can get a theme and understand where the government is sort of going to focus on. This is only, I've looked at only where the allocations have significantly gone up. Again, you see something interesting here. PM E-Bus. Last year, the allocation was 20 crores. And here it has gone up to 1,300 crores. So that's a significant jump. So that is where we see opportunities in different pockets. So if I look at the budget per se, I think there is not too much to read into the budget beyond this. And as I keep saying, it is the job of the media, especially the news media, to keep hyping it up, because they are in that 24/7 news cycle. They have to continuously put out content related to something or the other. Budget is a big event and they keep hyping it up. But if you see in the last 20-25 budgets that I've been seeing, you hardly remember any. I mean, after 10 years, you will not even remember this budget, because now a lot of the taxation, etc., have moved out. GST is not within the budget framework. income tax is now more or less sort of getting streamlined. I think we already talked about the capital gains tax. This time, non-equity taxation was rationalized. The FM indicated about doing an overhaul review of the entire direct taxes, and that's something which probably will come either the next year or the year after that. So we'll have to wait for that. But other than this basic takeaway that nothing much has changed in the focus of the government in the last 1 year, is the only message that we need to take away from this budget. Now, after that, let's now look at what is happening around in the world. And what is interesting for me to see is that India is now standing out globally as one of the bigger players in the business and the economic landscape, right? So I think recently S&P, I think last month, upgraded India from neutral to positive. We remain the largest country, or we remain the fastest growing large economy as per IMF, and that is going to continue for the next 2 to 3 years. The manufacturing PMI has been above 50 for, I know, probably now more than a few years. Overall, if you look at what is happening to India, and if you look at the narrative, I read the Wall Street Journal and Financial Times, the number of positive articles, first of all, the number of articles about India has exponentially gone up. Say 5 years back, the number of articles in FT about India maybe was 1 or at most 2 small articles. Today, every day you will find 3 or 4 articles about India in FT. So that shows that India is now taking mind share or mind space in the minds of global decision makers. Next important point that I want to talk about is valuations. Everybody nowadays keeps talking about valuation. The market bahut bad gaya hai, bahut high valuations, etc. Now, if you look at the median Nifty P since 2007, we are slightly above median. Are we completely out of whack? No. Now, if I look at the same thing at a much broader index level on Nifty 500, we see the same picture, right? So purely on an earnings basis, we are not way above, anywhere in bubble territory in terms of valuations. So that's something we need to remember when people talk about very high valuations. One of the very important things that is happening is we are seeing regular sector rotation. One of the reasons why I am very bullish even today is that no sector practically has run up continuously for the last 1.5 to 2 years. If you see the sectors which have done well, you can look at defense, you can look at railways, you can look at any PSU banks. You will see that they are running up for 3, 4, 5 months, and then they're taking a breather for another, maybe a similar period where they're going sideways, and then maybe again the rally starts thereafter. So it's not like the 2003 to 7 phase, or maybe the 2006-7 phase where everything was going up unidirectionally. You need to start becoming very, very careful when everything starts going up together. Right now, we are not seeing that kind of a problem. So that's something which is very important. Now look at the fundamental backdrop. Corporate balance sheets have become much, much better over the last 5 to 10 years. ROEs of companies have started to increase. Debt has significantly gone down. Bank balance sheets are significantly better. And another very important perspective from the capital inflows perspective is the MSCI EM basket, right? Now, this is an index which is very important because this determines a large amount of passive inflow into the country, right? And we have been gaining market share for a long period, and now it is coming at the expense of China. So China's share is going down, India's share is going up, and that is why over the next 3 to 5 years, I think India, we will see a significant amount of capital inflow into India. This I think we already discussed. We continue to be the fastest growing major economy in the world. The RBI dividend that has come, that it's a huge dividend, 2.1 trillion, and this has given a very handsome, or this has given a great leeway to the finance minister to bring down our fiscal deficit to 4.9%. If you remember, fiscal deficit was planned to be 5.1% in the previous vote on account budget that was published earlier this year. Now, partially because of this very handsome payout from RBI, India is able to contain the fiscal deficit to 4.9. Now, what is the implications? You might ask, what is the difference between 5.1, 4.9? क्या ही फर्क पड़ने वाला है? The difference is that the better fiscally managed we are, the better our sovereign ratings will be, and the propensity for large capital inflows from foreign institutions, the likelihood starts, going up. So this is very important. Domestic inflows is, and I think we don't need to talk about it. Everybody's aware. It's just crazy. And in my opinion, it will get much, much more crazier in the next 5 to 10 years. Doing SIPs has become like it's like a culture shift today. Young people, when they're getting into the workforce, one of the first things that they are doing is starting their mutual fund SIPs. So DII inflows is going to be very, very strong. I don't buy the argument that a couple of years of lackluster market or corrections in the market are going to change anything materially. I think this is a matter of habit. It's a matter of practice. And I think this is slated to be much, much higher. While I'm talking about SIP inflows, just to give some historical context, the biggest bull market in the history of the world was actually seen from early 80s to 2000 in the US. And one of the biggest determinants of that huge bull run was the 401k plan that was envisaged, or that was rolled out. Now, 401k plan let the common American citizen participate in the stock market, equity markets. What we are seeing with our mutual fund SIPs is pretty much the same thing. So my estimate is that over a period, so we are now looking at direct demat accounts and things like that. But what we should see over the next decade, for example, is how many additional people are investing through mutual funds. I think equity as a culture is going to get much more broad-based, and a lot more people are going to get into the equity markets through direct or indirect methods. This is a very important or interesting slide from a context that if you look at emerging markets, India is one of those rare instances where we achieved very high growth, primarily with growth in the services sector, mostly through IT. Last few years, excluding last few years, I think the bulk of the growth that India has seen came because of IT in the last 2 decades. Now that is getting augmented with pharma and business services. So the services part is going to increase. what is interesting is if you exclude India and see the other emerging economies and how they developed, right? What has happened is most of them, or nearly all of them, have developed through manufacturing. And manufacturing is important because it provides jobs. If you see the focus of the government yesterday, also in the budget, uh, and the general, discussion around us is that we need to create much more jobs because of our demography. Now, here what you see is the history. Now, so if you look at Thailand, it had a very high growth phase for 5 to 6 years where it grew by more than 9%. And if you see manufacturing as a percentage share of the economy, leapfrogged. So you will see this right through from Thailand to China, Indonesia, Vietnam. All of these countries had a reasonable amount of period.
Yeah.
So the point I was making was, so if you see the focus of the government through PLI schemes, through the boost of trying to increase manufacturing in India, and we are seeing some positive developments, although we are in the beginning stages. Semiconductors, we are beginning to see some traction. Mobile phones, we are beginning to see some traction. A lot of these, in fact, we will see more and more traction in automobiles, making, made in India and then exported globally. We've already seen a good amount of exports in two-wheelers. So these kinds of things, ultimately, I think pharma is a great example. So what I'm, looking forward is that we are probably getting into a phase for the next 6, 7, 10 years where Indian manufacturing today is at 15%. Now, China went from about 10% in their manufacturing share to 32%, or 9% to 32% in a span of about 15 years, in the 90s and early 2000. Can we repeat something similar in the next 10 to 15 years? I don't know. But one thing is very clear is that is the path that we want to, get towards. We want to, services is something which is a given where we will continue to do well. We need to upgrade our manufacturing, and that is the focus now that this budget has also reinforced. So that is something that we will be looking at. Now, what does manufacturing require? Amongst other things, what we will see here is that India is going to be one of those outliers where the working age population is going to be below, is going to be more than 50% even till 2060. Right here, this chart talks about only till 2045, but even till 2060, India will have a greater than 50% of people in the working age bracket, and that is a huge boon. If you look at the macro, right? If you look at, say, Japan, one of the reasons why it went into a contraction period in the early 90s is because Japan became demographically in a declining age pretty much from that period. Same thing is now happening in China. So don't sort of expect that China will suddenly, turn around the corner, even though there will be a lot of noise around that. People will always think that China is going to come back again, and it will. There will be a bounce. China is going to be a much larger economy, but the pace of growth is definitely not going to be as much as in the past, and it will be significantly low. India, on the other hand, has this opportunity of having very large number of working age population. And the average earning of employees in the manufacturing sector in India is also fairly low. Now, obviously, this will go up as and when the demand-supply mismatch keeps, gets changed. But if you again take a much larger picture of other competing nations, you will see that you are competing against China, you're competing against Vietnam, where Vietnam is even today more than 50% more expensive in terms of cost of employee. And we also have scale. So we are very, very well poised. And I think this is my last slide. All of this. So when we talk about manufacturing, when we talk about growth, what are the bigger pockets of manufacturing, right? We look at chemicals, where India is a very dominant player. Pharma, we are probably the most dominant player in the world today. If you include, APIs and other stuff, maybe at a similar stage with China. I mean, China and India are more or less the two big players in generics. Industrial machinery is something again that is a very big opportunity. Electrical, electronics, semiconductors, huge opportunity. Automotive, again, huge opportunity, especially when we are seeing a migration. So whenever a migration happens in terms of technology, so right now we are seeing a migration from ICE engines to either hybrids or electric. So the older factories will slowly get defunct, right? So there is when say a General Motors or a Ford or a Toyota or a Honda or anybody, right, a Volkswagen, whenever they are now in their boards going to think about putting up a new plant, definitely India would be one of the countries which they will consider. Whether they will put up the plant here or not is a next problem, but India will definitely be in the consideration. That would not have been the case if the transition was not happening, right? If there was no change and no need for additional or new plants to be put up, then this opportunity probably would not have been that big. But again, automotive is a very big field. Textile and apparel, again, is a very large industry employing a lot of people. So again, something where opportunity size is very large. The number of people are going in the world is continuing to increase. And there and fashion is also changing fast, right? Today we are seeing, we've all seen what Trent has done with Zudio, right? The fast fashion. Globally also the same thing is happening. Initially with Zara, now with Shein. So all of this fast fashion is picking up. So the cycle time of textile, etc., is going to shrink, and a lot more of manufacturing is going to happen. So I think that is the short presentation that I had. This is the last one. You can reach me either on my Twitter handle, or you can subscribe to my blog. It's free. I keep putting out whatever thoughts come to me. I don't write to a schedule. I just write whenever I feel like it. And I every week I put out on a schedule, actually, 2 articles, one on Wednesday, one on Friday. Basically trying to learn some new topic every week, trying to feed my mind and that of our team, also our readers, on whatever is happening around in the world, not only in investing, but in science, in technology, in business, in life in general. Because I personally have always believed that investing actually requires knowledge about everything, because everything affects investing, everything affects business. Politics affects business, sociology affects business, currencies affect business, science affects business. Just to maybe take a minute more, say 3 years or 5 years back, nobody was thinking about large language models. People had never even heard of LLMs, right? Chat GPT, etc. Nobody had heard about GLP-1 stuff, right? I mean, drugs. Today, everybody is talking about Wegovy or Ozempic or things like that. People are talking about uh, different language models like ChatGPT 4 and so on and so forth. So, and if you see the way it impacts different businesses, different uh, industries, it is mind-boggling. So, it is our job as investors to keep abreast of whatever is happening around in the world. And that is what I try to do for myself, and I try to document that for myself in the blog. With that, I'll close and let's go through some questions.
Thank you so much, Abhishek Dada, for that wonderful session. And we had some interesting development in between, but I think let's get back to the main part. You ended on a very important note. So we have all heard about or learned about vociferous reading, but we have a vociferous reader as an example in front of us. So without getting into books and magazines, we'll first focus on the topic which we had in our hand. So my first question, and by the time I ask my questions or my team's questions, all are free to keep on sharing your question on the chat box. We'll try to cover as many as possible. And when Abhishek Dada tells me that he's tired and he wants to stop, I'll stop.
Hey, that is a problem. I will not get tired. You will get tired. And your audience, see, stop it only when you see people dropping off.
Yeah. So I also don't get tired. My rules of my podcast and presentations are till the time the guest is happy and the audience is happy, I'll continue to go on. So with that, so first thing is on a personal investor level. Okay, what was your thinking from a portfolio level? What is your view on the budget? How will you look at this budget? Do you make any significant changes in the portfolio, not in the terms of stock picking?
Like I said in the beginning, sorry to interrupt, most budgets are meaningless from an investment perspective. वो देखना ही नहीं चाहिए.
Exactly.
Right? Because ultimately there is no meaningful the only thing you have to look at is there a change in the direction of the thinking of the government?
Right.
That has not happened. And that happens maybe in fact, if you look at, if you're honest and if you look objectively, we've not changed direction in the Indian economy after 1991-92. Since the Narasimha Rao budget, Narasimha Rao Manmohan Singh budget of opening up the economy, for the last 30-35 years, irrespective of which party, which coalition, who has been in power, the economy has been, running in a very similar manner. The focus has been more or less on similar areas. There will always be small differences here and there. Ultimately, it's not very, you have to, like we say in the markets, right? You have to understand the trend, right? You have to, even in this, you have to understand the trend of where the market is going towards or where the economy is going towards. I think that as long as we are, able to understand that, last 2-3 years, the focus has been on capex from the government. Central capex is very high. State capex is, very high. Now the government is asking private capex to pick up. That is not going to pick up until and unless demand picks up, right? वो बोलने से कोई, nobody is going to put up plants, right? Ultimately, plants will come up organically if demand picks up. If today, whose demand is picking up? You see Apple coming and saying that we will probably put up a second plant. Why? Because, iPhones are selling like hotcakes in India. Right? Similarly, whoever is able to sell their products is putting up capacity. If you are not able to sell your products and your capacity utilization is 35% or 50%, you will not put up a plant no matter who says what. And one of the reasons why, if you see, for example, in the cement sector, the last 5 to 10 years, everybody is putting up capacity irrespective of the capacity utilization. And that is why you see that even though infrastructure has been growing up, cement prices have been stagnant for a very long period of time. Right? And that is what happens when ultimately you keep building capacity without the end use of that capacity coming through. So to answer your to answer your question in a very short manner, directionally nothing has changed in the budget, so you don't need to change anything in your investment, the way you are investing.
I completely agree with you over here. I am also a firm believer, even though I think you made a very good point when you took the whole context of even from 91 till now, there has been directionally no change. That's a very important point, because sometimes we take too much importance, not just in budget, but also which party is in power and all. But maybe the demography dividend with which India has right now, at least for the next 10, 20, 25 years, till the time we'll start having aging population as a problem. I don't think that is a problem for the country as a whole. So my next question is again, it is again a very myopic question, wherein yesterday only after the announcement, people, you have alluded to that a little bit in your presentation also, but if you can explain more on the LTCG and STCG in the long-term frame of things, do you really think it matters as investors or as economy, or in any way, does it affect the market? Like, for example, in 2018, when LTCG was first introduced, people think that was the main cause. Many people attribute that as a main cause of market going down from there. I personally don't believe in that. And if that was the cause, why did the market rise in the last 4 years?
No,
Because
so see, knee-jerk reactions will come. Market participant. See, nobody likes taking away money. Nobody likes giving away money. It's as simple as that. Now, let's look at one thing. Let's look at a business and think about how a business can increase its top line, its revenues. I'm not talking about profitability, just top line. There are only two ways of increasing top line, right? Either you sell more products or you increase the price of the products that you're selling, right? Giving an example, let's say you're selling Bata shoes. Either you sell more shoes, number of shoes, or you sell higher price shoes. There is no other third way of getting more revenue. You look at the finance minister, or you look at taxes in the same way, that in this country, you have a set of people who are paying taxes directly, indirectly, whatever. Now, because of political compulsions, because of historical reasons, that is the set that you are, that is the set you have. That set may be 5 crores, 10 crores, 15 crores. We can debate the numbers. We can, look at it. But assume that it is, say, 10 crore people who are paying taxes, or in some manner, whether direct taxes or LTCG, STCG, whatever. Now, that is the total base that you have. So the finance minister, whichever finance minister comes, tomorrow, even if you become the finance minister, what options do you have? Either you mine those people and increase your tax share, you get more from those people, right? So increase the price of the shoe, or sell more shoes. So sell more shoes is what? Get more people into the tax net. Now, direct taxation, you are not able to do that because of historical political reasons. That is being done through indirect taxation. So GST today is a consumption tax. Irrespective of your economic stature, you have to pay indirect tax. If you buy a matchbox, you have to pay indirect tax. If you buy a Boeing jet, you have to pay GST, right? So point is that is the way you are increasing your tax base. So ultimately, that is the only way the country is going to get resources, right? There is no other way. Right now, what is happening is the current base of taxpayers are getting mined, and additional people are coming in through the indirect tax loop. Coming to investment, I say that, or what I maintain is that investing or taxation is a cost of doing business, right? As long as nobody is taxing you on your capital, something like a wealth tax, similar to a wealth tax. So as long as people don't say you have to pay, say, 1% of your AUM as tax, you are fine. You are paying X percentage of your profits. A profit, if say today you have 100 rupees, at the end of the year, you get 125. You are paying, say, within the year you sell it off after 360 days. On that 25 rupees, you are paying 20%. So you are paying 5 rupees. Previously, you were paying 3.75 rupees. So it has gone up, no doubt. Anybody who has to pay more taxes will feel bad about it. Those are all given. But will you materially change the way you do things because your taxes have gone up? I don't think so. Or vice versa. Did you do anything different when taxes have gone down? Right? I don't think so. I mean, people don't. It is a passing phase. After 7-8 days, people will get used to it. If you remember, when STT was first introduced, there was a big hue and cry. Markets crashed because people thought that trading volumes will dry up. Nothing happened. It's a cost of doing business. You adjust to it. For short-term traders, they will have to do their risk-reward cost-benefit analysis and then take those trades accordingly. It's just that.
Right. I again completely agree with you on this. It's just that in the near term, it is more because of the media, the way media present it in front of us, and now not just media but also social media, because everybody is talking about it. We get
See, nowadays I say that social media is the media. I don't think if I look at the younger generation, people in my office, people who I interact with who are much younger to me, I don't know any one of them who are watching television news. Right? Everybody is on YouTube or Twitter or Insta or whatever.
Even my dad nowadays watches all the political news on YouTube rather than on television.
Absolutely.
That's the case right now. So now moving on. So I think you have set the tone really well by saying two things. Number one is budgets actually never matter in terms of investments. When you are looking at the investment landscape, budget doesn't play any material role from an investor's perspective or from a company's perspective also sometimes. Second is that all these taxes and all, only when they get implemented, we see a lot of discussion. But ultimately we get used to it in 7 days, 10 days, or maybe 1 month, but life is normal after that. So now that we are very clear on these 2 points, I'll pick up a few questions on particular sectors. So before I go to that sector, I was more interested in knowing which are your favorite sectors. I know you would not be comfortable with sharing the stock names, and I would not force you for that. I would not try to take names about that. But if you can share about a few sectors, I know personally because I've been following you for a long time. But if you can share for the larger audience.
So I think very bullish on overall manufacturing, like I mentioned today. I think we are probably in for a decade long period where manufacturing is going to do well. I'm very bullish on within manufacturing, say chemicals, pharma. Other than manufacturing, I mean engineering, capital goods, all of that. Other than manufacturing, I really like railways, because I think the government is actually putting in a lot of money, a lot of effort, and it is also visible and impacts a lot of lives in India. So any sane government will do it, right? Because visible. The moment you roll out a new train, it is visible. So it also gets you votes. So you have to now think from that angle that it's something that will get you votes and you spend on it, because the political cycle also is very short, right? If you think of politics as a business, and if you have to get re-elected every 5 years, and you have a referendum sort of every 1 or 2 years with different state elections coming up continuously, you will also, as a politician, want something which is out there, which people can see, right? So roads, railways, these are things that impact a lot of lives directly, indirectly. So I think that will continue. So railways is another sector that I really like. And I also, I think insurance is a sector, both life as well as general insurance. I think last 4-5 years, we've seen a lot of policy changes that has happened, and due to which probably a lot of these companies have not done well from a stock price perspective and also from a business perspective. But I think now a lot of the industry consolidation has happened. A lot of these smaller players have been bought out by the larger players. And now we are seeing probably more and more traction coming in into this insurance sector. So that's something that one can keep a watch out for over the for slightly longer term perspective.
Yeah, so I think you didn't include aerospace and defense in this. Would you like to share more about this sector?
I don't know what aerospace. Aerospace mein, what are the listed players? Indigo. That is the only probably listed player. I don't like Indigo a lot because I think inherently it's a business where as a business you don't control any of the prime movers of the business. If you think about it, an airlines business, what are your main characteristics? Your main you're dependent on the air turbine fuel. You're dependent on your competition raising and changing prices. And for the last 1 year, I think Indigo has done well because Air India, Vistara, etc., SpiceJet, all of these other guys have had problems, and they've stuck to their guns. Indigo has done well, but over a longer period of time, I don't see because it's a race to the bottom. Very few people are very adamant that I will only fly Indigo. Incidentally, I'm probably one of them. But I think if you get equally good opportunities somewhere where the price is less, because in India, your maximum flying time is roughly 2.5 hours. So it's a commodity, right? Wherever you see a better pricing, reasonable timeliness, you will go and buy that ticket. So I'm not very bullish on Indigo for a longer term perspective. Short term, idhar udhar kuch bhi chal sakta hai. Aerospace, I think other than that, there could be other players. And if you look at defense, I think is a very interesting play because every country is going to have to invest a lot in defense because of the way the global structure is changing. After about the Second World War, so 1940s onwards, if you see the history of the world, you had US, Russia, then Russia went away as the prime power, and US was the only dominant power. Now you are seeing a scattering of that, and China is coming up, and you have this Russia and China together, and US, if Trump wins, we don't know what will happen, but we've seen his discussions about what his intentions with NATO. And the last term, he was very clear saying that US is not going to defend countries which are not helping US, in any way. So you will see defense budgets rising across, especially in Europe, Western Europe. I think with the Russia-Ukraine war, there has been a lot of concern in the European NATO countries about protecting themselves and increasing. So we've seen Germany, we've seen a lot of these countries increase their defense budgets. So defense, I'm positive. India is becoming a predominant power in terms of exporting to smaller countries. We are exporting to some African countries, some Asian countries. But we are at the very nascent stage. We're in the beginning stages. And my concern right now with defense is that the valuation, the pricing is probably a bit on the richer side. You might want to sort of take a rational view and look at the opportunity versus what the price that you're paying. But as a sector, over the next 5 to 10 years, I think defense is going to do well. The other thing that we have to understand about defense, especially the army and the procurement in the army, is that the way the wars are going to be fought is going to be very different from how they have been fought earlier, right? So that is something that we need to keep in mind. a lot more of drones, a lot more of remote controlled uh, uh, autonomous vehicles, etc., is going to happen. So a lot of investments is going to go there. So the technology change in defense is also going to be very high. So you have to keep that in mind when you're investing. So somebody who's making, for example, uh, very large missiles or mid-sized missiles, I don't know. I mean, that may not be around after a while, because people might want to have very small but very targeted, missile attacks. That is what we are seeing in Russia, Ukraine. So that nature is going to change. I'm not a defense expert. Just whatever I've been reading across the global media, that is my perspective. Defense definitely is going to be doing well. Export opportunities there, but you want to be very sure of the growth versus the price you're paying.
Wonderful. So if I understood you correctly, I would assume in your portfolio allocation of railways would be much higher than defense, right?
I would think so at this point, because see, railways is not just railways. Railways is also metros. If you look around, we are seeing metro rollouts happening across the country, right? Tier 1 cities, tier 2 cities, and this is going to keep growing, right? Once you have the main line in a city, then there will be other lines. There will be extensions. There will be requirement to add more trains, more frequency. So public transport, large, fast public transport, is a requirement also for the the COP27 or the climate change directions, or the greening actions that we are supposed to be taking, right? So it ticks a lot of those boxes as well.
Yeah. So since we are on railways, and so Harshal from my team has just posted a question on the chat box. I'll just quickly ask that question first. So hello, Dada, very insightful session. Last year, the execution on the rail safety side was little low because of technicalities and execution issues, as per some articles. How do you see that? Mainly because of some recent accidents.
See, accidents, unfortunately, is or has been part of railways forever, right? I think because of the vividness of accidents and the deaths and the horrific nature of images that we see, we sort of look at it a lot more. But I think in terms of quantum of accidents that has happened versus the number of people that are traveling, I think the number has gone down substantially over these things you cannot look at on a year-on-year basis. You have to look at, say, in blocks of 5 years or 10 years. So are we better off from the 80s, from the 90s, from the 2000s, 2010, 2020? So are we making progress on a decadal level? Because it takes a lot of time to, put up these infrastructure projects. And no matter, which government is in power or whatever happens, it cannot be done in a day or in a year or 2 years. India is geographically vast. It is too complex. The terrain is difficult in places. So it's not very easy to, and of course we have resource crunch. It's not as if that even if we want to, we can do whatever we want and upgrade railways. All of us. See, I love trains. So given an option, I will take a train over a flight. And even today, I do that if the distance is short. Very recently, I was outside India, and the standard trains are in the place that I went to were all traveling at about between 200 to 250 kilometers an hour. They are standard intercity trains. Now you think of a train which is traveling at 200 or 250 kilometers an hour in India, and say a distance from Calcutta to say Bombay, Mumbai, or Calcutta to Delhi, we can cover in 12 hours, 13 hours, 14 hours. It's going to be phenomenal. It's going to change a lot of things. And now you look at the other side as well. I mean, look at the demand that we have in railways, right? Uh, I don't know if you travel in trains, but today, if you have to, you know, get a reserved ticket, you'll have to book months in advance, right? So the concept of, I mean, or else you have to go to Tatkal, right? So why should that be? I should be able to go and buy a ticket for, going to say Delhi 4 days from now, right? Can we get there in the next 10 years, 20 years? I don't know, but I think that is what we should be striving towards. So railways, there's a huge opportunity size. In terms of execution of the Kavach system, obviously Kavach is not one system that you go and implement somewhere, right? It has to integrate with your signaling system. Let's understand the intricacies, right? Your signaling systems are all not uniform. Somewhere you've taken signaling system from one company, in another zone you've taken it from another company, right? You'll have to integrate your Kavach system with all of those signaling systems. So there are complexities on the ground. Then you'll have to have sensors all across, all along the lines built in. So it will take time. I think the allocation, the seriousness is there, and we've seen. I think 3 players were approved to do Kavach. 2 more companies have been approved. I think over the next 2-3 years, maybe a couple more will be getting approval. Excuse me. So things will, become faster. And let's hope for the best. I mean, obviously, because I am a train traveler, I sincerely hope that train accidents do come down.
Right. No, that's a good point. So I see.
I don't know whether I answered the question, but
No. So he
long
was
drawn monologue. I don't know whether I answered.
No, he was basically trying to ask about Kavach only, and I was so happy that you actually covered the Kavach aspect also towards the end. So I think his question has been perfectly answered. Okay, he's also responded on the chat.
Yeah, so Kavach is ultimately, it is going to get rolled out. See, initially you want to go slow. You want to ensure that it works. The initial phases, I think, was done in Sealdah section from Calcutta. That was one of the first implementations. Once that has happened, now it is getting rolled out across the country in some of the bigger, more dense areas. Slowly, it will get done over the. I'm forgetting the numbers, but I think the next upcoming announced, orders that are going to that are expected. I think this came out from one of the railways notifications. Is actually going to be substantially large. I think it's going to be larger than what we've done till date, cumulatively. So I think it's going to pick up. It's going to get much faster.
Great. So that was very well explained. So I see a lot of questions related to market reaction yesterday and today. So I'm not taking those questions into account. So
see, I'll tell you, basically market 1-2 दिन में reaction has no meaning, because somebody would have taken a position, some large traders, institutions would have taken a position before the budget with some point of view. They might be squaring off, or there could be funds, etc., who were waiting for the budget to see which direction the wind will blow, and then start taking positions. So 1 or 2 days market up and down is just random noise. So you just have to ignore it. The minimum time frame I think you should be looking at when you trying to understand the trend in the market is at least a couple of weeks to a month. So a month from now, you'll be able to understand that, what is the direction of the market post-budget.
Right. So, Dada, one sector which we have seen a lot of traction in the last, I think, maybe 10 to 12 months, especially is the power and the whole power value chain landscape. So if you can just give us a idea as to where do you see much better opportunity, because it's a very large and wide sector. So which are the, I'm not asking about stock names. I'm just talking about categories or subcategories in the whole value chain where you are more bullish or where you think there is more opportunity for investors today.
So power essentially, see, first let us understand the macro view. Any country which is going to develop, going from an emerging to a developed economy, the per capita consumption of power is going to go up. That is one of the first things to go up. Maybe just after we see improvement or diversification in food consumption. So if you look at the consumption pattern of what happens when per capita income starts to rise, and this is historically documented across the countries, right? One of the first things that happens is people move food intake moves from cereals to proteins, right? Consume less of rice and wheat, move to proteins, whatever form, right? It could be eggs, it could be eggs, milk, uh, chicken, fish, whatever, right? Another equally important is the consumption of power that goes up, because slowly what happens is once you becomes slightly better off, you will buy a television, you'll buy a mixer grinder for your kitchen, right? You will buy these kinds of electrical gadgets start coming in as the household starts going up the economic ladder. When we were growing, if you remember, I don't remember, maybe 1 in 1,000 houses in Calcutta used to have ACs. Today, if you go to a apartment building, a flat building, every house, every flat will have 1, 2, 3 ACs, right? The whole roof is filled with ACs. Why? Because the consumption of power is going up. So net, we have to understand one macro thing is that the consumption of power is going up. Now, if you look at the value chain of power, right, it starts from generation, transmission, distribution, right? That is the chain. And then you have the ancillaries. So people who supply transformers, people who supply cables, people who are ancillaries to these ancillaries. So people who supply transformer oil, people who supply the insulator for the cables, etc., etc. Now, in my opinion, the another part I forgot was the end of the value chain, or end of the supply, not value chain, the supply or of this chain after distribution is your metering, right? So now we are seeing a migration to smart metering. So these are the components that you have. I personally think that the bigger money will be made in the ancillaries and the metering part. The core of power generation and distribution is actually a very difficult, very capex heavy, and very regulated business, right? So short term, you might get some benefit here and there, but the bigger money is to be made in the ancillaries, people who supply I think transformer stocks have been in a tear. Similarly, people who supply components to transformers and other stuff. The wires, conductors, all of those, that segment will do well.
So interestingly, you said, I understand your point when you say that probably the ancillaries will do much better than the capex heavy ones where government policies and regulations will play a lot. But why not? It will affect the smart meters and the other sectors.
It will. Smart meters again is going to do well because that is going to increasingly come in. See, I was speaking to one of the managements of a power company, and he said whenever we go into a new city, so for example, whenever there is a change in distribution rights from, say, a state electricity board to a private player, one of the first things that they do is they try to reduce T&D losses, right? They try to reduce theft. So one of the first things they do is take the overhead cable. So if you go to a lot of these smaller towns, you will see electricity coming through overhead cables. One of the first things that they do is they take those overhead cables and put it underground, right? You cannot put the same cables underground, right? You'll have to, buy new cables and put that up. So next is you want to put up smart meters so that you know exactly what is happening. Over a few years, once we have more of solar panels and etc., we'll start having more net metering. For net metering to work, you need smart meters. So this is a directional change. It's going to happen. It's going to take time, but this is a change in the direction that is going to happen. So smart meters and all these ancillaries, I think, are going to do well over time.
So one last question related to power, and then we'll probably move to other questions or other sectors. We have beautifully talked about the whole value chain, but you have not talked about the power exchanges. So what is your view on those businesses? I think one of them is listed also. In fact, two of them are listed now.
I honestly don't have a very, I don't have a strong enough view to comment on it, but my guess is you will always have spikes in demand and supply. I don't see power exchanges, etc., doing exceptionally well, because that is always going to be for that last minute or last 24-hour or spike management. Otherwise, all the longer term agreements are going to be done bilaterally, which is what happens today mostly.
Got it. Yeah. So I'll move on to the next sector. So Shivam from my team has shared this question. So we saw an emphasis on nuclear energy. Government will partner with the private sector to set up Bharat small modular reactors. So what are your thoughts on the areas where we should be looking at in this space?
So like I was saying, nuclear reactors or micro reactors, I covered what micro reactors was, etc., in one of my previous in my blogs in one of the learning sessions. So just to understand what micro reactors are and how is it different from a normal nuclear reactor. So there is definitely a lot of opportunity in nuclear, and obviously it is one of the cleanest and the most densest source of energy that is available today. And a lot of the problems that scare us of nuclear energy has been sort of addressed over the last few years with technological development. Now, if you're asking for individual stocks, etc., there are a couple of companies in India which work on nuclear technology, and a couple of them, I think, at least I know of one which is listed. I don't want to name it. It's fairly easy to sort of look it up on Screener or any other. Just you can probably Google it and find out. The question is not which company is doing what. The question more is of how quickly it is. How quickly we actually adopt it, right? Because these kinds of technologies, it's very easy to talk about it and do planning, etc. But sometimes we found that nothing really comes out of it, right? So we want to see some implementation happening, at least a few. So we don't want to get trapped like what happened a decade or two decades back with wind energy with Suzlon, etc. Right? You have a euphoria, and then suddenly you find that nobody wants to buy it, right? So we want to see nuclear reactors actually getting built, actually getting deployed. Only then we should actually start looking at stocks related to it.
Fair enough. So just I'll take a pause and I'll share with the audience that we got to know about nuclear reactors by reading the Substack of Abhishek Dada. I think you posted it in the early part of this month only. I think 3rd of July you you or your team made a post on this particular topic.
I do all that.
Achha,
you see, all of these, the learning itself now is basically aimed for myself. I am the audience for all of this. both the learning that I do and then the curiosity that I publish on Fridays.
Friday.
The objective is for me to it is designed for me to force myself to learn something new every week. That is the objective. So it's not something that somebody else does and I just put it out.
That is wonderful. So I think Harshal has already shared the link of the post which was made by Dada, I think on 3rd of July. So you all can probably look, and I would highly recommend to subscribe to. All these are free. And see, most of us are clueless as to what to read, which are the, so there is someone who has more than 2.5 decades of experience, who is already doing all the reading, and he's making a list of all the good readings and what you should know about different industries. So I think this is something which we all will find value adding. So sorry for that digression a little bit, but let's come back to the question. So this question is slightly on the macro front. So again, Shivam asked this question where he says that we see that the government is pursuing macro stability, especially when you see that the duty on gold has been slashed handsomely, plus the one pointed focus on curbing the fiscal deficit. Of course, there's the credit rating upgrade angle also. But are we seeing any external crash-like situation like we faced in 2008 or not? I think you alluded to this point a little bit in your presentation.
I honestly, I did not understand the question. So whoever asked that, can you add something more to the question?
Shivam, can you just type on the chat box if you want to further explain that question? Yeah, so it's just typing, we'll just see. So till that time, I can take up the other question. There was emphasis on pumped hydro storage power. Any views on that sector? Do you have any view, Dada, on pumped hydro power?
So hydropower ultimately is going to work only probably. I mean, I'm not an expert in this, but only is going to work on the hilly areas. The bigger challenge with hydropower or overall in India is actually water availability. In pumped hydropower, what we are doing is essentially we are creating if I'm not mistaken, you are creating a virtuous loop by pumping up water at to a higher height, and then you let it flow down and thereby run the turbine generator. And so basically, you take a part of the power being generated to pump up water to a higher level. Again, I mean, these are things which all of these will work. I mean, like I mentioned earlier, India is a very vast, geographically complex area. So you will see a lot of power plants in places like Himachal, in Uttarakhand, if you go to North Bengal, if you go to the northeast, you'll see hydropower plants, and some of it, I'm sure, I mean, would be using the pumped storage. But can it be implemented in a plain land? It's going to be it's not going to be possible.
Right. So the next sector which I had in mind was till the time Shivam expands on the question, I would ask this question, which is, so I think probably from 2000 or maybe even earlier than that, because I have history till 2000, the staples in the consumption basket, staples have done phenomenally well till I guess 2020 or 21. But post 2020, what we are seeing as a different trend is consumer durable is doing far better than the staples category. Do you concur with this view? And why, if you...
No, exactly. The reason I already mentioned, right? The moment you move up the per capita income curve, if you look at what per capita income was in 5 years, 8 years back, it was about $1,000 per $1,000. Today it is around $2,000. So the higher up you go, this is the pattern that is going to be there.
Right. Right. So you have any favorite in terms of, I'm not talking about stocks again, favorite sector, because consumer durable is also very vast category. It includes many things. So like, for example, if I have to say, when you look at the penetration level, so probably a fridge or a washing machine has a far higher penetration level than compared to something like an AC or like a water cooler, right? Water cooler or water,
So
sorry,
there is this
water.
continuum, right? So initially a person will buy a mixer grinder. Uh, then probably they first of all, when you get electricity, probably the first thing you'll get is light. Then the next one you'll get is a fan, right? Then you will get maybe some kitchen appliances like a mixer grinder. Uh, then probably you will get something like a refrigerator. After you finish all this, then you will go to the next level of consumption, which is you'll start probably looking at a microwave, you're looking at a washing machine, uh, you're looking at coolers, ACs. AC to me is at that level. Then the next level is you'll look for dishwashers and things like that. Okay. So again, this is a continuum. I don't have any favorites. I think all of them will do well. You're talking about a population of 100 crores or 150, our population is say 140. If you take half of them, say 60, 70 crores of people getting onto this consumption bandwagon, everything will do well. The question is, which business is going to do well and how much are you paying for it? Right? Everything, we've seen companies like Symphony do well for a period of time and then not do anything for a longer period because competition just came in and from all sides, right? Similarly, you see, I mean, this is the same thing everywhere. I mean, today, in white goods, in all of these refrigerator, washing machine, etc., we find unlisted players like Samsung, LG, etc., being very, very large in market share. I hope, like Hyundai, at some point in time, a Samsung and an LG will also list in India because, again, that is a theme. We didn't talk about it, but that is a theme that I am actually very positive about. That over the next decade, you will find a lot of these large companies who are, dominant in India getting listed here because this will become one of their primary markets.
Right. No, but I'll just rephrase my question. Probably I didn't phrase it properly at the first time. My point is that, of course, as you rightly said, that if 50, 60, 70 crores of population will consume, everything will do well. But of course, there will be difference in speed of growth, difference in competitive intensity, and difference in valuation. So when you take all these three angles, do you have any favorite in this, or do you think that some of the areas where you see valuation or probably the other things making it very stretched, or you can't find it comfortable? If you can share some.
No. So again, I mean, like I was saying, when you have a secular growth phase, everything economically starts doing well, right? So you will sell more fans, you will sell more ACs. Obviously, the number of fans sold will be more than ACs, right? But the profit margin, etc., for ACs might be higher compared to a fan. So whenever you're investing, you'll have to take all of this into account, right? Also, the fact that maybe fans are more saturated in the market than ACs, right? So all those factors are there. I don't have a favorite. I would again start looking at ancillaries. So people who are providers, so somebody who makes the bodies for all these white goods manufacturers, do we have a play there? Somebody who makes say switch gears, or somebody who makes switches, is there a play there? So that is, I think, where more people are not so focused on, because they are trying to play that actual theme, whereas you're trying to play a ancillary theme, adjacent theme, where valuations may be slightly cheaper.
No, that was a very interesting angle which you would. So it's better to play it through an ancillary rather than predicting out of the OEMs which one will do well, be it the fans or ACs or any other category, right?
Or else you get into a company which makes multiple products.
Yes.
So that could be a, there are multiple players in India like that who have multiple products. Or tomorrow, if say a Samsung or an LG gets listed here, they could be very good place.
So another thing which just pops up, this question just pops up in my head after listening to your answer there, is that my understanding, I may be completely wrong, this my limited understanding is that many of the daily consumption goods, I think when they initially come, in our mind, it is more of a scientific discovery or scientific, sort of a scientific, which is not easy to get. And probably that is why they are sold at a premium. And that is why the margins of these companies are also very good. But over a period of time, they become commoditized. So probably, if I have to say segregate, probably something like a water purifier or an air purifier today, compared to a washing machine or a electric fan, or sorry, not as in the fan and the lights manufacturer, you will see the difference in margins and difference in ROEs also, because in the first category there is less penetration, there is less competition also, there are very less players in the market. And in the second category, even though those categories also did very well in the past, but today probably compared to this first category, they are not that attractive. That was the main point which I was trying to allude to when I first asked that question. Do you, in your head, do you make those kind of, I think you have partly answered that question already. I understand that you don't make any distinction like that, right?
I honestly, I mean, if you think about it, uh, let's think that you have to buy a fan, right? How many of us are actually fixated on a brand कि मुझे यही brand का fan लेना है? You will look at the design, you look at the color, and you look at the price. You whenever you start thinking of buying, you'll have a price range in mind. Whatever color design suits you in that price range, you'll probably go and buy, right? So in my opinion, you're better off buying a company which say provides copper wires for the rotor of the fan to all the fan players or 30% of the fan players.
Got your
You
point.
don't care whether company brand X is selling or brand Y is selling, your job is done.
Right. Completely understood. So moving on to the same point which Shivam asked, he has reframed the question. I'll just read it out for you. So we saw gold duties slashed from 15% to 6%, probably incentivizing it as an asset class, and the focus on bringing the fiscal deficit to 4.5% by end of next year. And credit rating upgrade is surely an angle to it also. But do you see that there is a chance that government is trying to protect the domestic market from an external financial shock, given the state of global economy?
Very difficult question to answer, honestly, because I don't know enough. And secondly, I don't think incrementally how much gold will you. I mean, if you are not thinking of buying gold, and in India, most jewelry purchase is related to marriages. People will not increment suddenly because the duties have been slashed. You will not go out and suddenly start buying gold. Exactly like you will not stop investing or trading because the taxes have gone up. You will not go and suddenly start buying gold because the duties have come down. It's just a sort of a byproduct of some decisions being taken. So I don't see too much to be read into it. It's also possible that it has been done to reduce smuggling gold into India, because the incentives of smuggling gold is going to get reduced. And as far as protection from the global financial system, I don't think it's possible in today's day and age, because we live in an economy, we live in a world which is interconnected. Something happens and trade stops in the Suez Canal, we see an impact in India, and so on and so forth, right? Everywhere in the world, we see some impact. So, if something is going to go wrong somewhere, ultimately it is going to have repercussions. I don't think you or me buying uh, a few grams or milligrams or whatever kgs of gold is going to make any difference to the country's credit rating or whatnot. I don't think it's going to make any difference at all.
Got it. Got it. So, since you brought this angle, I'll just bring up the point which you also mentioned on your presentation. Like earlier in the past, when we used to, specifically pre-COVID, in the pre-COVID era, whenever there was, so we were very much dependent on FIIs in terms of movement and direction. So FIIs, if FIIs would make a large buying, that would be a signal that the market is probably going to go up. And when FII is selling, we'll see a huge crash. We have 2008, 2000 as examples. Of course, after that, in the long run, the fundamentals work. But from a liquidity point of view, we were dependent a lot. But as per your presentation, and as we all are aware of the current situation and basically in terms of SIP, so do you see that even in case of, say, any external shock, even though FIIs outflows will probably impact us, but the kind of impact which it used to have earlier will significantly reduce going forward based on the SIP inflows we have?
It has already reduced. If you see, what has happened in the last few years, last couple of years. Today, FII flows don't really matter all that much. I mean, like it used to, 5 years, 10 years back. I remember 20 years back, whatever FIIs used to do, that is what used to drive the market because the volume was there. Today, the volume is more with domestic institutions and retail. We should not, we should not look or disregard Indian retail investors. Indian retail investors have also become extremely powerful. There is very large amount of money which is coming in through the Indian retail, other than the institutions. So, my current fear, to be very honest, is actually the reverse. My fear currently is we will get hit with a deluge of capital coming in the next few years, and we may not be equipped today to handle that. Now, what are going to be the repercussions of that is you will see stocks which are expensive getting double, triple more expensive from here, and people who are sitting outside thinking that, this stock is expensive at 40, 50 P, they will start screaming every day because those stocks will be at 70, 80 P. Because if you have a lot of capital chasing in a very short period of time, that is a problem that can, come. One of the ways of that sort of mitigating that is going to be large IPOs, right? So a Hyundai IPO comes in and takes away, say, 20,000 crores, right? Another, say, LIC. LIC has, I think, 3.5% that is for public. They have to get down to 75%. So the remaining they have to sell. Again, huge amount of paper that is going to come out. So those are things which are going to absorb the capital that is going to come through, right? So I think Indians in the near future will have the problem of the opposite sense of more money coming in than what we can handle.
That's a very, very relevant and interesting angle which you have brought in. So that brings me to a question like this. So what do you do as an investor? If, say, for example, if that, what you're saying, if that plays out sometimes in the future. So as of now, as we discussed, that we are not in that bubble territory, and the run has not been like everything is running every day. It is sectoral rotation, and it has played out beautifully up till now. But say what you say starts happening? Do you book profit? Do you cash in everything? What do you do?
Again, very difficult question to answer. We'll have to take it, as it happens. You can't, tell now. But at all points in time, you'll have to be aware of the context in where we stand, how things are, what are the valuations, what are the capital flows, what is the liquidity situation, uh, how much you're paying for the business, what are the growth profile looking like, and then you'll have to take a call. And sometimes you'll be wrong, and you have to be right more often than wrong. That is the game that you'll have to play. There are no easy answers or no prescriptions that I can give uh, today that will help either me or you.
Got it. So I don't know whether you are comfortable sharing this or not, but would you like to share what is your current allocation percentage? What is cash as a percentage of your
No cash, why cash?
100% investing. Okay. That gives some idea as to how you are looking at the market right now.
Even my personal, in my overall, my personal portfolio, etc., I'm 100% in equities. I don't have anything else. This is the only thing I know. This is what I understand. And I think that in the next 10 years, if things go right for India, the way I'm thinking that it will, we should be able to make the most money of our, that maybe a generation or maybe more than a couple of generations have been able to make. Because you get that time and that space in life when you are at that inflection point, and where the country overall does well. And when everything does well, and you ride the wave, it can take you anywhere. And I think India is just getting into the groove. We're getting a lot of recognition globally. India is now fair and square in the boardrooms of all large companies, in their mind share, mind space. Another thing that nobody really talks about is, which is, non-monetary terms. Let me ask you this question. In non-monetary terms, what is the most highest value export that India has?
I think our human capital.
Exactly. So the people that we are, the people, Indians who are going abroad today, we see CEOs and across large companies of Indian origin, right? I am not saying that is going to materially change what those companies are doing in India. What I'm saying is that it creates a mind share in the minds of people of that country, that okay, India is not a place which is far off, and people may be weird, people may be sitting on elephants, and there's snake charmers, etc., right? They can see that, okay, Sundar Pichai, this guy, he looks like this, he talks like this, and so on and so forth, right? So the more examples of that, the more they interact with people of Indian origin at senior board levels, the acceptance of the country goes up manifold. The way the Indian IT companies have done work during COVID, supporting global companies, I think it's just phenomenal brand building exercise, right? So over the next few years, the next decade, I think, it's the time for India.
Great. I just squeeze in one question related to IT because you brought IT. So if you look at from say 1995 to 2000, this was a golden period for IT services company. Large companies like Infosys, TCS, Wipro, all these companies have done phenomenally well in that 20-25-year period, right? But during that period, we didn't have too many product companies, IT product companies. But post-COVID, what we have seen, some of the new age companies have also listed. And then there are some SaaS-based product companies also in the IT in different regions. So how do you see that as a mega, as in from a 10-year, 15-year, 20-year view? So can we think something like that can repeat for the
See,
product?
very simple answer to this. Why did we not have product companies before? Because it was easy money for services.
Right.
You were selling, and in fact, we were basically doing body shopping. We were selling people, at a per hour rate, and you are multiplying it. I remember when I started working, was like, I think $40-$45 to a rupee. Sorry, ulta, 40-45 rupees to a dollar. So you are multiplying by 40, 45, 50, and you are happy. You are making humongous amounts of money without making an effort. Why will you put in effort? Doing product work requires a lot of effort. It requires investment. You don't know how it is going to turn up. You have to do marketing, etc., etc. Right? Product development, in that phase, you will not make any money. Here you are just, here basically you're hiring people and pushing them off to a client and billing them. That's it. Over a period, why did these services companies start doing poorly or not so well is because it became a commoditized business. Ultimately, everybody figured out, boss, everything is the same. All the PPTs of all the companies look the same. They're saying the same things in different language. But essentially, everybody has the same capability. Right? Everybody has a set of clients, and clients have also become intelligent. Right? Clients started hiring, people from these large IT companies as their CIOs, CTOs. Those guys knew, what the tricks of the trade were. So, they started pushing the margins down further. So that is how you started with a, 30, 35, 40% margin business to now much lower, less than half of that. And that is how the progression has. The next level is, once you have that, base, now you can invest. And also you have this new wave of, startup people, some of who are beneficiaries of this, IT boom of the previous era. So, they have parents who've lived in Silicon Valley or, that cohort, and they are starting up these companies now. So now you will see more and more IP based, more and more product companies starting out of India, and they will do well. That is where the opportunity lies for us. Services, jo hai, wo chalta rahega. I mean, these companies will keep chugging along and doing reasonably well, throwing off dividends to you as investors. Big wealth creation probably is over for most of them.
Yeah.
Unless they can pivot and get into something else, which is again going to be difficult because it's not in their DNA.
Right. So I see on the chat box somebody is asking about the co-working space. Have you?
Yeah, I saw that.
Yeah,
I think co-working space in India, ultimately, what is a co-working space? Essentially a commercial real estate. You just sort of, divide it up and give it out to different people. I think it's a good idea. It will do well. It's been actually around. I mean, if you come, places like Calcutta, Mumbai, and other cities, at least in these two cities, I know for sure, co-working has been around for decades. Just the name has not been there. You will have these kinds of one floor that somebody is there. He does all that management. It was not so fancy, not so well decorated, but it was there. I mean, sharing of workspaces, etc. was all there. Now it's being more formalized, done in a much better way, and this is definitely going to be fairly. This is going to do well.
Right. So there is a little probably off-topic question, but I'll still ask that because I think it is important for everyone who is attending live or who will watch the recording. So the question is, how do AI tools aid in equity research for people working in this domain? Your thoughts on, will it help people in this job role?
Will it help?
So I think the question is not
Yes.
clear.
So I see AI will help definitely. There's no doubt. How you use, what kind of tools come up, that is more important. But definitely it will help. There's no two ways about it. Today, if you see a ChatGPT version 4 or a co-pilot, does a fantastic job of summarization. You give it a big document and you ask it to summarize, it will summarize, right? In fact, it will summarize it better than somebody maybe sitting and doing it manually. I use Screener a lot. So if you look at the stock note or the con call things that come up, that's all Chat GPT, right? Fantastic. So it is going to definitely aid over time. It is going to get better, right? So I think, what else? Will it?
I think a part of the question was also related to, will it become a threat to people in the equity research community?
AI will be a threat to people who are low skilled in anything. Low skilled white collar workers are going to be a threat. So exactly like robotics is a threat for manufacturing. So I'll just give you an example. So a car manufacturing, say 2 decades back or a decade and a half back, used to have between 1,000 to 2,000 people on the shop floor actually doing the assembly. Today, it is less than 100 because everything is done mostly by robotics. So the low-end work has gone. Similarly, if you look at AI, the low-end work of, if you are answering somebody's chat, if you are taking a call, service agents, that job can be very quickly automated and given to an AI because it will be able to learn and adapt very quickly. Today we are seeing it on written medium. Tomorrow you will see it on verbal, audio, visual, whatever. So the low end work is going to go. That's for sure.
Yeah,
so all these summarization. I know a lot of people who used to be employed to make summaries of annual reports, of con calls, etc. in institutions, financial institutions. Today they don't have a job and they're they have to upskill themselves to do something else. As long as you are doing something more value added, you will have a job. When will that come to an end? I don't know. That depends on the curve of the progress of AI. At some point, it is also possible that we are all, going to sit and read books and lead a leisurely life, and all work is going to be done by computers and bots and other things. That is the one possible likely scenario in the future, 10, 20, 30, 40 years later, I don't know. But as of now, immediately, if you are in the lower skill level in any white collar job, it is very important to upskill yourself. It's as simple as that.
On that note, I think we have already taken 2 hours of your time. So thank you so much for spending time with us and answering all the questions. Just before we let you go, any closing thoughts you would want to share with the investing community at large?
See, one thing I always say is equities is what will create wealth. India is in a sweet spot today. In the next decade, we are likely to create humongous wealth from equities, from businesses. And wealth creation happens through businesses. You will not find anybody, you very rarely, probably not find a single person in the Forbes 100 list who's an employee of a company. It is only through equity participation, whether as a founder or as a co-founder, etc., that people can create wealth. India is at the cusp of probably a great run in the next 10 years. So if you can afford it, Remain invested, invest as much as possible for the long term. Don't get bogged down by price volatility movements here and there. That is par for the course. It will happen. But if you are able to compound at 14, 15, 16, 18% over the next decade, and if you keep continuously adding to your capital, just look at the amount of wealth that you can create. So, my parting message would be that, keep the faith, keep investing. I think we are in for good times.
Thank you so much, Abhishek Dada. It was wonderful having you. And thank you so much for all our audience who have been patient listener and asking some really good questions. As always, we'll soon share the recording with all of us. It will be put up on our YouTube channel as well. And I'll share the recording with everyone. Thank you so much, Abhishek Dada, once again. And
thank you.
Have a good evening. Bye.
If you like this session, then you will love to become a part of Mission Smile membership, wherein we conduct these type of sessions exclusively for our Mission Smile members on a monthly basis. And we have a repository of content that we have done for the last 36 months. Link is in the description box below. Thank you so much for watching this session. Goodbye.